Hey guys and girls, this is CA Anita Gandhi. I welcome you to my show in understanding the process for investing. So, the idea is that I have been working for last 3.5 decades, the first 5 years in the industry and later 30 years in the stock markets. So I have learned quite a lot during my these span of my working life. And the idea of this video is to share all those experiences and the learnings to you so that you adopt right process for investing. We keep on hearing about a lot of stories that equities is an asset class which gives the highest returns. We also hear about a lot of people who have made lot of money through investing. So we all focus on the earning part of it, but we do not focus on the process part of it. So I'm here to help you out to understand what are the basics of principles of investing to make it successful investing and to earn good amount of returns through the way of investment. People outsiders, they feel that investing is, some people feel it is very 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 easy, and some people feel it's very complex, but it's not that easy. At the same time, it's not very complex. It is science as well as it is an art, and if you follow the right process and have good amount of patience, I'm sure you're all going to make good amount of money through your investing. So India as a global market cap currently has about 3% of the global market cap. So you can imagine it is a very small part of the overall global investments. However, we hear about so many successful investors who have made good amount of wealth, and this is all possible if you follow the right process. So as an outsider, I used to feel it's very complex, but when you start learning it and following it and with the right process, you are going to make good amount of money. It really does not require very good amount of high education. However, a good reading habit, following right channels, right reading habits, selection of right companies will take you to making good amount of investment. So now with the help of, fortunately, with the help of internet, lot of information is available for understanding companies. I will be sharing you the right sources. Even BSE website gives good amount of information, and we will be discussing about 5 to 7 principles of investing, and if you follow them thoroughly, I'm sure you're going to make money. So there are more than 5,000 companies in India, and choosing a right company is the solution. And how to select the right company at right point of time, and what are the factors to make those decisions, that is what we are going to discuss over the next series of our channel, our classes. So the important factors for selecting any company, what you need to understand is there are various sectors, but within those sectors you have to first select the right sectors. But within that sector, you need to understand the demand supply position of the overall sector. What is the overall market competition, overall market situation? Is it very competitive sector? Is the technology in the sector continuously keeps changing? What is the market share of the particular company that you're going to choose? What are the margins of this company? What are the valuations of this company? And what is the quality of the management? Though I spoke to you about quality of the management as a last factor, it actually comes as the first. To give an example, we have seen there are various cycles in the markets, and during these cycles, those companies who follow right compliance, very good quality management, the right principles, they only sustain the bad conditions, and they also emerge out of the bad times. So quality of the management actually is the first factor which you need to focus upon. Second is the valuations. The valuations is something which, if you, even if the best of company having the best positioning in the market share, if you buy it at a very expensive valuation, it's going to be tough to make money. So that's why valuation also plays very vital role. How to understand valuations, we'll have a separate series for that. Margins of the company are very very important. Just to give you an example, I was just doing some analysis 8 to 10 years back, and I had done analysis of around 200 companies in which I was trying to select a company which is giving good margins with good volume growth, that is the turnover growth. And at that point of time, I had figured out Tata Elxsi. At that point of time, the price of this company was around 240 rupees. And this company year on year has been giving very good margins. At the same time, the turnover growth is also there for this company. Also in the technology, which is helping these technology companies do not have any debt as such in the balance sheet. And at that point of time, this company's share price was 240, as I mentioned, and today it is hovering around above 8,000 rupees. So you need to quarterly keep on looking at the results of the companies, and that's the reason filtering the companies and looking at their margins, which are beating margins and able to keep on giving good margins quarter on quarter, and also overall top line growth. These are the companies need to be selected. What is the market share of the company also plays very important role, and whether the company is in a position to garner higher market share over a period of time, and also remain in the position where it has a higher market share. These kind of companies will always be winners in the market. How is the market competition? Are there any, or whether the competitors can enter the market very easily, or is the entry of the companies is going to be tougher in that particular sector, also plays a very important role. And the demand supply. So if it is a particular sector wherein the demand itself is dull, then that particular sector is not going to do well. And if a particular sector, the demand itself is good and the company has good market positioning, that company is going to do very well. So we will be in my next show, we will be discussing these factors one by one in a very, I'll explain all these factors one by one. And just want to tell you that, don't go by tips, because tips are the things which come at the sort of fag end of a rally which takes place, a stock price at much higher point of price, and at that point of time the information about these companies start spreading. So when I gave you the example of Tata Elxsi around 8 to 10 years back, so that time nobody was looking at Tata Elxsi. And when it comes to say 8,000, 10,000 rupees, that time everyone starts talking about this company when the valuations are a bit expensive. So that's the reason your study is going to help you out to make money. Don't go by too much market information. By grace of God, today with the help of technology, a lot of information is available online itself. If you know the right technique and you follow the right process, I am sure you're going to get, you're going to earn good amount of money. You need to have good amount of patience, and please do not invest that kind of a money which is required tomorrow, because this is a game of patience. And if you want the results tomorrow, invest today and results tomorrow, that's going to be difficult. So you need to be very, very patient in this game, and I'll connect with you very soon with my next video. Thank you so much.